going on, guys? Welcome back. It is Institutional here, and we are back with another video for the systematic trading series. And this is going to be volume 3, and it's going to be called Time and Price. So what we're getting behind, what we're studying today is going to be time and price, and how we understand this is there is an algorithm in the market, right? So it's as simple as you guys can get caught up trading specific patterns, right? And you can see them in a time and price of day. Like you could see this maybe like at 5 p.m. And what I will tell you is do not get in at that time. Because why? Because the algorithm is assigned to manipulate you at that time. What you want to be looking to get in is in sessions. So you want to be looking to get in around London. London would be from 2 a.m. to 5 a.m. And what will happen in the majority of the time is you'll have an initial push to the upside. You'll have what we call Judas swing, right? So it'll be a fake out to an order block or to liquidity that we have to grab, and then it'll continue its overall trend. So this is the pattern that will happen in London. But what will happen in New York majority of the time, it's we will have order blocks being respected. We will get the retest to the order block right here, and then you have a specific pattern happening that you guys know how it goes, something like this. And then once it comes back down, you can get in that. All right, and that's what happens in when we are in New York session. Now, looking at this, when we are understanding time and price, it's as simple as not getting in, and again, not in every single time frame, just waiting for that specific time to get in. So I'm going to show you guys a couple examples of this and how the algorithm works. So again, a little bit quick rundown. The algorithm is what moves the market. Don't think about it like there's somebody pressing buttons here to stop you out and they bring the market up. And now the algorithm is assigned to bring buying liquidity and bring selling liquidity, so both ends can always win, right? So now let's go ahead and look at some chart examples. And for this one, we can take a look at, let's take a look at EURUSD, of a trade that we actually did catch yesterday. And once again, time and price, right? So we can see that what happened here was we had some liquidity at the bottom. We grabbed this, we dropped down. We dropped down now to the M5 as a liquidity model. What you want to look for also is some manipulation that happens. So if you look at it, before the market opened at 6:30 a.m., here you have what you can call type of bull flag pattern, right? So you have the bull flag right here, and then you have the push up, you have the manipulation. What you're looking for now is for all this liquidity to get grabbed. So price comes all the way down and grabs all that liquidity right here, as you guys can see. So you grab the liquidity, and then now you're looking for is these targets up here. These targets up here, and this is your main profit area that you're looking for. So if you look at it now, what do we see happens next? If you guys look real closely, we have the pattern, and we have the drop down, we have the liquidity hunt, we have the order block. So you go ahead and place your long position right here, and your shorts can be right below the order block right there. And all you're looking for is the top right here, which will be a nice 7 to 1, right? You got triggered in, and the time is what? 10 in the morning, right? So London, New York session is going to be from 8 till 11. I sometimes like to trade a little bit beyond that, so around 12 will be the max that I'll take trades, but that will be more with futures and index pairs, so we can trade that. Maybe gold sometimes as well. Metals is not bad, but I would just focus on trading the S&P after 10 and not looking for any currency pairs after that, because the volume does die down a lot. So that's a great example right there with EURUSD. We can now take a look at an example with S&P, right? So same thing, right? We can see how we had the initial run up right here. If you look at each one perspective right here, let's go ahead and take a look at it really fast. You can see how we had a push up right here. We're still respecting out of these order blocks right here, and we have an order block right here, right? So now we're looking for is for this to be respected and for price to push back up higher. If we look at the M5, when we go down, we can see that price comes down, and here we have, again, you have that initial manipulation run. So all you're looking for is this to get manipulated. We get manipulated here, so here you have a level of POI, POI, and POI, and your target is where? Your target is up here. And if you look at the time, this is why you do not want to trade at this time. This is what you have this manipulation happening before session. So 7 a.m. happens, price comes down, 8 a.m. now gives you a nice push up. You have the liquidity run right here. You have an order block. You could have gotten in that one, and if you didn't get in that one, you'll want a safer bet. Okay, you can get in this one right here. And what do? You place your long positions right there, stops below the order block, and take profit above. A nice 6 to 1. But let's say you did miss that trade. You got another opportunity right here, which is where? It is at 10 a.m. So price comes all the way back down, gives you a new order block right here. You can like that, and there, 4 to 1, right? So it's as simple as understanding where we are at in with time and price and taking that to your advantage. Understanding that there's an algorithm and the patterns that you see happening on a day-to-day basis, they continue happening, but only in that specific time and price. And you need to have an order block to the left that tells you or shows you where smart money was either accumulating, right, or where they were distributing, right? Now, let's go ahead and take a look at another pair. We can go ahead and take a look now at a pair that I actually did not trade. I missed this. This was a couple days ago with USD Cad. And once again, we are always looking for liquidity. So if we look at this from an M50 perspective, here's liquidity right here. We have equal highs pending right here. And what this means is that any research trader that is looking to sell this, they're looking to sell at these highs. So they sold here, they sold here, they sold here, and they sold here, right? So there's a lot of orders sitting above. So that's what we're targeting all the time. We're targeting liquidity because that is what the algorithm is targeting liquidity. If we look at it, and we go back down to that file over here, what do we see happen? We see the exact same thing, right? We have our order block here, and you have your initial push up. We have the fake where everybody gets subbed out. So now you're looking for what? Time and price. You're looking for that initial run back up towards this. And I told you guys, New York usually we get that fake Judah swing, which is the initial run down before the price starts being respected on New York session. So we get that drop down. What do you see happens now to your right? We have a push up. New York opens up at 7. We have another push up, and guess what? We have liquidity here. We have an order block here. And where does this happen? 9 a.m. You go ahead and place your long positions down here. You have your stops below right there. And your take profit area can be above right here. A nice little 7 to 1. You get triggered in, and price gets you out in what? Probably like, let's see how long that would have taken you. So you get triggered in 30 minutes, an hour. So an hour, and you got yourself a nice little 7 to 1, right? And the point of this video is to make you understand that, once again, it's taking advantage of time and price and understanding that when you're in session is when the most volatility is going to happen and when you're going to have that specific type of pattern that we will talk about in the future. But the specific type of pattern that I think we did talk about a little bit is going for that liquidity, going for that same setup, which we talked about in volume 2, and then applying that with time and price. All right, so I hope you guys get a little bit from this video. I will see you guys in the next one. Institutional is out.